So everyone in my Discord has been asking for a full rundown video of exactly how I turned my small £300 portfolio into a £17,000 portfolio. Firstly, this is a long video, so grab some snacks, but also this has been a pain to edit. So if you wouldn't mind liking, subscribing and clicking the bell, I would be over the moon. Around 95% of viewers aren't subscribed, so if you wouldn't mind, that would be absolutely incredible. Also, just so you know, I've timestamped the whole video from start to finish into 3 sections, those being teething problems, first signs of juice, and current day. So if you just want sections, you're more than inclined to skip to them, and there will be a portfolio tracker in the top left tracking my portfolio value after major events. It won't be absolutely accurate due to other investments and trades taking place at the same time, but you'll see the rough change. So without further ado, let's get into it. Just as a little forward to the start of my investing journey for any new investors out there, mistakes are the only way you truly learn how to do something. The first parts of my journey seriously were not the prettiest start to investing, but you'll see that. I thought it was kind of important to just show these mistakes because in investing, no one is infallible. So with that being said, my investing journey started on the 6th of November 2020, so exactly 4 months ago, which sounds crazy to say out loud. I had been reading and watching a couple of videos about investing, notably from a few YouTubers such as JKR Investing, Dividend Bloodhound, and so on and so forth. Because in England, investing isn't broadly covered, and I felt confident to start looking at stocks to actually invest in after watching these channels. And so, I made my Trading 212 account, opened up the portfolio, put £300 in, looked at a chart and did absolutely nothing. I have never been so stumped by something I've looked at before in my life. When you first open that account without a real plan and you see lots of charts, categories and sectors, it kind of overwhelms you and gets multiple thoughts going through your mind like, am I losing money by not investing straight away? What will make me the most money? And ultimately, do I want to leave money in this strange app? I'm quite firm in my belief that nothing will train you for the stock market apart from experience. You could be told something 1,000 times, but ultimately your own mistakes are what will give you the experience to sink or swim. But I'm going on a tangent. After 30 minutes of staring at all the stocks on the front page, I made my first investment. An investment of 160 Great British pounds into a company called Aurora Cannabis, the only company that made it through the absolute waffle of stocks going on in my brain that I knew had decent prospects for the future. So I invested the money, stared at every little movement it had until 9 o'clock, then went to bed. So, flash forward 3 days. I'd been reading some articles about how weed stocks were the next thing to boom, trying to stay confident in the investment I made the days previous, of which I had also invested into Sundial Growers and Afria Inc. And there's a problem here. There is no diversification. I thought at the time that my investments were into a growing market, but had no idea about the fact that stocks and emerging sectors were a rocky ass ride. And so I made my first big mistake after just 3 days of being invested into these companies, and I sold each and every one. I sold Aurora for a £17 profit, which at the time I was incredibly happy with. I sold Afria for a £5.10 loss, which I tried to convince myself was covered by profiting on Aurora, and I sold Sundial for a whopping 10 pence profit. Now, it's important to note here that I'm not in any way, shape, or form well off. I was using money I'd saved from a really good amount of time, so every gain and loss was a massive deal to me. But there were 3 mistakes to learn from here. I didn't know why the stocks were going up and down, like at all. I didn't know about catalysts. I learned that diversification was seriously needed and not just touted to try and restrict gains. And 3, I needed to get my head stuck down and learn about how to invest, because what I had done to that point was technically swing trade badly. Now, not noted here were the absolute flurry of trades I made that I was severely lucky were either break even or pennies lost or made.
What the freak?
And I made a lot out of ignorance towards knowing how to invest. It's easy to look back now and realize that, hey, that's dumb. Why are you doing that? But honestly, those first days and weeks of investing are genuinely like a foreign language without people helping and guiding you. So I don't exactly regret it, and instead I try to make sure people don't make the same mistakes as me through trying to teach people on my Discord, where we try our absolute best to help investors of all abilities and experiences in their journey to growing their wealth. So what did I do about this lack of knowledge? Well, I did something I'm notorious for doing well in my personal life. I acted like a sponge and tried to learn absolutely everything I could about investing. I put my head in website articles aimed at beginners, I watched even more YouTube videos, and most importantly, I joined several different Discord and Reddit groups to try and learn from more experienced investors. And I quickly learned something. There are two types of different investors that you'll meet in your journey into finding communities. You'll either find incredible people who will help understand the markets, sectors, and stocks and try help guide you, or you'll find people that kind of see you as a target to almost like flex their understanding of the markets over you. It's weird. They almost try to scare you out of investing, and I encountered, unfortunately, a lot more of these people than the good people. But thankfully, this didn't dissuade me from following my journey, because I'm sure it will have done a lot of others. I did, however, cling to the people that did try and shine a little light on helping new investors, and I actively talk with one of these people to this day. But I can confidently say having people to talk to on a regular basis that are willing to help you on your way to understanding how to invest is the most valuable resource you could ever have when you're just starting out. Now, with all that in mind, and the massive tangent I've just gone on, and the copious amounts of research I did over the next weeks, I made two decisions that would alter the early game of my investment journey and cement the idea that I almost had an understanding of what I was doing. I made several swing trades of a company called Express, and then invested the profits into a little company called AMD. So, what is a swing trade? Well, it's where you buy and hold a company for a short amount of time with the belief that it will rise with a catalyst. This form of trading is risky, albeit not as risky as day trading, and should I have been doing it after just 15 days in the market? No. But did I know what I was doing? Also no. But did I at least research and understand the catalysts that were occurring? Finally, yes. The company I swing traded was a company called Express. A company, for all intensive purposes, at that time wasn't anything special and had a price of 65 cents. Now, what was special about Express was that they were very close to being delisted from the Nasdaq, the most popular Western market in the world, and most companies will do anything to stay on it. And so with the belief that they would artificially pump their own stock price to stay within the guidelines, I withdrew money from all of my other investments, a stupid idea, and invested parts of it into day trading Express. On the 17th of November, I traded and sold Express 3 times, and by the end of that day I had turned £400 into just shy of £1,000. Obviously, my past self was over the moon, but if I was to look at it from the perspective I have now, I could have lost all that money. Day trading has two perspectives. You either understand it and you could take advantage of it with expert analysis, or you can play it like a slot machine and bet on whether a catalyst will pay off. Now, my past self would have loved to say it was expert analysis on its market situation, but knowing what I know now, it was definitely 2 parts luck and 1 part analysis. And I did this a few more times up until December 1st, of which I swiftly learned this wasn't sustainable, all the while investing profits into another company. So after being absolutely rinsed by a few friends for being stupid, albeit them being happy for me.
Are you serious? This is torture. You're torturing me and everyone else watching.
I atoned by investing into a company that would be my first short-term investment, and a hell of a good one at that, and that was AMD. So December was the month that I finally realized that, wait a second.
Oh shit, here we go again.
DD, you don't currently have liquid money. AKA, I wasn't able to put more money into my account at that time, so I would constantly be working out of my gains and buying and selling to fund new investments. Now, this isn't exactly terribly bad, but it did have to make me extremely resourceful. I started reading into growth stocks and undervalued stocks, in which in some cases I could find stocks that were just simply undervalued, or stocks that were undervalued but I could also hold for a long time and would constantly develop. Now, as I've mentioned, I invested most of my gains from Trading Express into AMD. Now, AMD had absolutely smashed it over the weeks where I first started Trading Express, and whilst I was Trading Express, my AMD investment was growing. My average price for AMD was around $83, and on the 1st of December, AMD was around $94, which was a considerable increase. So what was the play from here? I had good gains in AMD, and I didn't see those getting much higher from my research into their future prospects. So this is where one of my anchor stocks come into play. And if you're part of my Discord, you might know which stock this is. It's the Chefers, the Tattooed Chef. On the 1st of December, I sold some of my AMD to fund 50 shares into Tattooed Chef, with an average price of $14.35. After weeks of hard research into the company and knowing that by all accounts, it was just seriously undervalued. I can honestly say Tattooed Chef was a massive learning curve for me. It's the first company I truly researched and put diligence into, and it set the precedent that with hard work came the reward. And I still own Tattooed Chef to this day as a long-term investment, because every piece of research and diligence that went into that company has paid off dividends. Personally, the way I invest and trade, albeit rarely on the latter, has all been decided by how things have worked out for me in the past. I've said time and time again that investing strategies differ from person to person, and that finding what works for you and it being profitable is hard to argue about. But from the 1st of December to the 9th of December, seeing the price movement in Tattooed Chef go up, and me knowing that I knew exactly why and how, cemented my investment strategy. And I wanted to see another stock do the same. So I started the arduous task into researching another company, Live Oak Acquisition Corp, which was SPAC merging with a company called Dynamo Scientific. This company tackled plastic waste and creating natural plastic utilities for companies to use. This company was also criminally below the radar and had several partnerships with PepsiCo, Smirnoff, and a whole lot more in the works, but simply no one was talking about them. And so after being introduced to the stock by my close friend on Discord, the XPOG, and a whole heap of research, I started my first investment into the company by selling off most of the rest of my AMD shares and buying 30 shares for an average price of $14.46. And it was time to see if my research on Tattooed Chef was a fluke or could be replicated. And you will really, really want to see what happens later with Dynamo. In the next week or so, I increased my position in both Tattooed Chef and Dynamo Scientific, with Tattooed Chef having 100 shares and Dynamo having 70 shares.
Nice.
Now, remember when I mentioned that I only swung trade like the odd occasion? Well, December was a month where two different opportunities arose. Firstly, my first ever secondary deposit into my account, which I deposited around £1,000 from a tax rebate, and with this gave me the opportunity to look into some lucrative investments, of which I had found two over the Christmas period. Now, disclaimer again, I'm not incredibly enthusiastic on trades apart from the ones that suit my strategy, aka the ones where there's very little risk because it's either undervalued or a company I would hold long term regardless of the situation it's in. But two companies fit this bill in December and both propelled my portfolio massively going forward. And these two companies were called Alpine 4 Technologies and Jaguar Health. First, Alpine 4, or ALP. ALP was a strange one. It was a company which was widely diversified in an array of technologies, but they were waiting on some news about work with drones, seeing as the US had just passed a bill that saw the decreased reliance on Asian drones in America. Now, ALP had a series of drone contracts with the US government already, so there were legs that these could just be increased. So I bought 300 shares of ALP and set my short-term swing trade in motion. And pop, 3 days later, and some good news about those very same contracts, I was almost £100 up and had Jaguar Health come onto my radar. JagX is a trade that honestly I could defend to the ends of the earth at that time. It was undervalued, had great healthcare products that were tested and proven in helping COVID and HIV long haulers, and a potential merger in the works. Nothing could convince me that that company didn't have a great place as a swing trade in my portfolio. So through selling ALP and various other profits, I bought a total of 2,000 shares of Jagex, finalizing my position on the 28th of December, my birthday. And on the 31st of December, I sold 1,000 shares at a break even to invest into a company called ABML, a company you will also hear about more later. And then on the 5th of January, as expected, with some great news pertaining to Crowfelmer, I sold 300 shares of Jagex for a £400 profit. Then on the 8th of January, following some more good news from the company, I sold 200 more shares for £421 profit. And then on the 12th of January, I sold my remaining 500 shares for $859, equaling a total profit of around £1,680 from a single swing trade. This to date is my best calculated swing trade, and through doing this, it opened up an incredible amount of investing opportunities and taught me that with knowledge and real diligence and analysis, trading can be an effective way of making money to reinvest if done properly. Now, I bet you're thinking that a majority of my gains have been like big swing trades, but you'd be dead wrong, because now we get to present day, which has all of my long-term holdings, and you'll see where my real big gains come from. And Danimer Scientific and ABML will make a reappearance. So we'll start off the look into present day in January. I didn't really do any trading or investing apart from bingo. I'll keep this one a lot shorter and simpler, as it was a simple and well executed swing trade that progressed my present day portfolio very well and let me invest into 2 other companies I desperately wanted in on, but didn't have the liquid funds to do so. So I bought 300 shares of bingo at $2.86, off of the back that it was severely undervalued, had seminars coming up about its flagship technology, and a whole lot more social events to make the SP rocket. On the 4th of January, I sold 100 shares for £295 profit, and on the 14th of January, I sold 200 shares for £676 profit, for a total amount of around £971 profit, on top of our initial investment. This was executed the same day I concluded my research on a company that I had been eyeing up for around 2 weeks, which is a company called Orbital Energy, a company I hold to this day and will hold for years to come, along with a good portion of our Discord and a good personal friend who caught the first run with me, Harry. Now, there's one stock that I mentioned earlier that I hope no one has forgotten, and that's Danimer Scientific. While I was busy making swing trades around Christmas time, Danimer was quietly working away in the background, executing the diligence that I had already done on it, establishing deals and progressively making more and more headway in the space. Bigger deals with PepsiCo, establishing new technologies for different uses, and a whole lot more. On the 9th of February, Danimer was testing absurd stock prices, and knowing the limits of the company I had to start taking profits, as it was running severely fast for its own good. And so I started. I sold 20 shares for £586 profit, a huge percentage increase. Then on the 12th of February, Danimer was running hotter, so I sold 25 more shares for £719 profit, even bigger increase. And then on the 16th of February, sensing the market getting hotter and hotter and a lot of attention in the wrong places, I closed my position by selling my remaining 25 shares for a £646 profit. Danimer single-handedly contributed around £1,951 to my portfolio. And with that, I invested in my next series of long-term investments. So, as with any portfolio, there will always be new positions started and ones ended. Currently, my portfolio looks like this, with a few huge unrealized gains, but it doesn't faze me because these are all long-term holds, and the price action in the meantime will do as it wishes. With recent markets, there has been a lot of red and my newer positions are a little red, but it all works in waves, and I'm confident in my portfolio that it will grow in the years to come. Orbital energy is an absolute staple, as we mentioned earlier, that was only possible really through the swing trade of a bingo, but it is a long-term hold which has seen 200% unrealized gains before me starting my dollar cost averaging. Argo is a company that I solely invested in through progressive deposits into my account, something I didn't think I could do, and that I started in January, and it's now up over 150% even after a lot of dollar cost averaging. ABML is a company that I took some profits out of because of how quickly it rose, but I will hold on to it for years to come and add to if it drops lower. And as you can see, Tattooed Chef, one of my longest holds, is still holding strong at 100 shares, and I will not be touching that for a long while. The newest additions to my portfolio, which were made up of other profits, are Drone Delivery Canada, Ace Convergence, and Powerhouse Energy, all of which I have great hope for the future, and have all spawned from my original investing strategy of intense research and diligence that hooks me to the company. I hope this has been a nice easy video to follow, and that it showed my portfolio and its progression these last few months. I just want to say I am still learning, everyone is still learning, and I hope this has shed some light to the fact that everyone, no matter how much experience you've got, can grow their wealth by investing. If you want to learn more about how to get started, I urge you to join the Discord, as it's the perfect place for someone new or mediocre or heavily experienced to learn more and more. But for now, if you wouldn't mind donking that like button and donking that subscribe button, it would very much be appreciated. And honestly, just thank you for the support so far. We've reached 250 subscribers, which I thought was almost impossible. I'm just a small boy from Yorkshire who just wanted to make investing videos. So, thank you very much. And that's me, DD-Bae, signing off.